Chapter 4. The Theory of Credit. 1. The theory of credit was brought to practical perfection by a long series of illustrious lawyers, whose doctrines were declared to be law by the legislation of Justinian in the beginning of the 6th century. The modern system of credit and banking is simply the practical exemplification of these principles. But for the complete elucidation of the theory of credit something more is required. For considerably more than a century mathematicians have been in the habit of calling debts negative quantities. But, from a want of knowledge of mercantile law, and the facts of commerce, they have not succeeded in giving the right interpretation to the term negative as applied to debts. We shall show the true meaning of the term negative as applied to debts, and when we combine these three things together, an exposition of the facts of commerce, an exposition of the law of credit, and show the application of the theory of algebraical signs to these facts, we shall find a most beautiful exemplification of the use of these signs, strictly conformable to their use in natural philosophy. The principles of algebra and law and the practice of mercantile men are in perfect harmony, and we shall in this chapter explain this branch of economic theory, so as to bring it to the level of mercantile practice. On the nature of credit. 2. All modern economists admit that human abilities, energy, skill, and character are wealth, because men can make a profit by their use. They are called moral or personal capital. These moral qualities and character may be used to purchase merchandise with a promise to pay at a future time instead of with actual money, and when they are so they are in popular language termed credit. Thus Demosthenes says, there being two kinds of property, money and general credit, our greatest property is credit. And also, if you were ignorant of this, that credit is the greatest capital of all towards the acquisition of wealth, you would be utterly ignorant. So Mellon says, to the calculation of values in money there must be added the current credit of the merchant, and his possible credit. So also Dutot, a well-managed credit amounts to tenfold the funds of a merchant, and he gains as much by this credit as if he had 10 times as much money. Credit is, therefore, the greatest wealth to every man who carries on commerce. When a merchant makes a purchase with his credit instead of with money, the property in the goods passes to the buyer as absolutely and as fully as if he had paid for them with money. But at the very instant that the property in the goods passes to the buyer there is a contract, or nexus, or obligation, created between the buyer and the seller, which consists of two parts. 1. The right to demand payment, in the person of the seller. 2. The duty to pay, in the person of the buyer. These two quantities constitute the contract, or the obligation, which is the bond of law between these two persons. In this contract or obligation it is the creditor's right to demand payment which in law, commerce, and economics is termed the credit, and this right is property, which the creditor can sell to anyone else, like any material chattel, and it may be bought and sold any number of times before it is paid off, and therefore it is said in Roman law, under the term wealth. Rights are included. Thus credit is the name of a kind of incorporeal property. It is the right to demand a future payment. A credit in bank is a right of action against the banker for a sum of money. Paper credit means rights of action recorded on paper, such as bank notes, bills of exchange, and c. On the application of the positive and negative signs to is economics. 3. We have just said that mathematicians have not given the correct explanation of the term negative as applied to debts. In so elementary a work we have not space to explain their error fully. We must simply give the correct meaning. In the beginning of works on algebra it is usually said that the signs plus and mean addition and subtraction, that quantities before which the sign plus is placed are to be added, and those before which the sign is placed are to be subtracted. This is true in some cases, but in others it is entirely erroneous. In one particular case the signs plus and do mean addition and subtraction, but that is only one example of a very wide and general rule. All sciences deal with quantities and operations. But though these quantities are similar in their nature, they may be endowed with opposite qualities, and when they are it is universally the custom in natural philosophy to distinguish them by the signs plus and. Thus up and down, to the right and to the left, before and behind, before and after, the past and the future, above and below, yes and no, supporters and opponents, rights and duties, active and passive, are opposite to each other. Thus, For example, if a line drawn to the right be called positive, one drawn to the left is negative; if one drawn up is positive, one drawn down is negative. In these and innumerable other cases the signs plus and solely distinguish the opposite quantities, and they have nothing to do with adding and subtracting. They merely denote some opposition, contrariety, or inverseness in the quantities to which they are affixed. But also opposite operations may be performed on these opposite quantities which are already distinguished by opposite signs. And these opposite or inverse operations are also denoted by the same signs plus and, thus to add and to subtract, to receive and to pay, to go forwards and backwards, and, in short, any operations whatever of an opposite nature, are denoted by these signs. Consequently, if we denote to create by plus, then to cancel or annihilate may be denoted by, and the combination of these signs of opposite operations with the signs of opposite qualities affecting the quantities, gives rise to the well-known algebraical rules. Plus gives plus x, dash, x plus x plus. These laws, which are universally applicable in natural philosophy, are equally applicable to economics, and are alone capable of giving the solution of the theory of credit. There are economic quantities of inverse or opposite properties, and therefore they may be distinguished by opposite signs, and also opposite operations may be performed on these opposite quantities, bringing into play the well-known algebraical rules. As a familiar example of the signs of distinction we may cite a thermometer in which some fixed point is taken as O, and degrees above that point are marked plus, and degrees below it are marked. If the mercury passes from any number of degrees on either side of O to any number of degrees on the other side of O, it is quite clear that to find the total number of degrees passed over, the degrees on both sides must be added together. In this and all similar cases the negative quantities must be added to the positive quantities, and not subtracted from them. This idea of opposition is applied to motion in a continuous line, and time in natural philosophy is considered as motion in a continuous line. If any point be taken in time, and denoted by O, then time on opposite sides of O will be denoted by opposite signs. Thus if we call time before this era plus, or positive, then time after this era will be dash, or negative, and the successive intervals will be denoted thus. Plus 5, plus 4, plus 3, plus 2, plus 1, 0, 1, 2, 3, 4, 5. If the birth of Christ be taken as the given era, or O, the years before Christ will be positive, and those after Christ will be negative. To find the number of years from the foundation of Rome to the present time we must add plus 753 to 1884. Or 2,637 years in all. For, as an illustration of the application of the positive and negative signs to time, we will give an example which will be very useful in economics. Suppose this question were asked: a father's age is 40 and his son is 15. When was the father twice as old as his son? Let x be the number of years before the present time when the father was twice the age of his son, then 40, x equals 2, 15, x, or x equals 10. What does this negative answer mean? It means that the father never was twice the age of his son in time past, which we have taken as positive in the question. The epoch or event of his being twice the age of his son is tossed by jurists. 73 he found in time opposite to the past, that is, in time future. He was not twice the age of his son 10 years ago, but he will be so 10 years hence, as is very clear, because in 10 years the father will be 50 and the son 25. Hence if any event which has happened in time past be positive, the same event if it is to happen in time future will be negative. Thus if a product or profit which has been produced or realized in time past be positive, the same product or profit if it is to be produced or realized in time future is negative. And consequently the right to profits already realized is positive, and the right to profits to be realized in the future is negative. The terms positive and negative also used by jurists to denote opposition. 5. The terms positive and negative are very commonly used by jurists to denote opposition as well as by mathematicians. Thus Ortolan uses the terms positive and negative rights to denote rights to acts and rights to forbearances. Jurists class servitudes as positive and negative. or those which consist in the right of using the given subject in a given manner, and those which consist in the right to a forbearance on the part of the owner from using the subject in a given manner. Austin speaks of positive and negative wrongs, or wrongs of commission and omission. In its relation to right, a duty is negative, but duties themselves are termed positive and negative, as there is the duty to do something, and the duty to abstain from doing something. Hence we may say in this case that we have a negative sign within a negative sign, as we shall presently find will be the case in economics. 6. Hence, arguing from these analogies in mathematics and law, we may in economics apply the terms positive and negative to any quantities whatever of opposite qualities, and to any operations whatever of an opposite nature. Thus if the right to demand 100 liters be denoted by plus 100 liters, then the duty to pay 100 liters will be denoted by 1001, without any reference to any specific tool. In cash. The theory of the value of land. 7. The theory of the value of land will clearly explain the nature of credit. Suppose we purchase an estate in land for 100,000 liters, where is the value of our money? Does it consist in things which have a present existence? The veriest tyro would answer, certainly not. Where, then, is the equivalent of the purchase money? When we purchase an estate in land, we purchase the right not only to the actually existing products of the land and labor, such as the houses, the trees, the crops on the ground, but also the right to receive the annual products of the land forever. We purchase the right to a series of products which will only come into existence at definite intervals of time forever. Thus property in land consists of two perfectly distinct parts, property in the products of the past and property in the products of the future, say, 3,000 liters a year for every. Now as these products will only come into existence at a future time, they, as has just been explained, are negative, if we assume the products which have already come into existence as positive, and property in land will be denoted thus. 6. Existing products of land together with 3,9001, 3,0001, minus 3,000 liters, and c. forever. Apostrophe. But though the yearly products of the land will only come into existence at a future time, the right to receive them when they do come into existence is present, and may be bought and sold like any material chattel, as a horse or a book. Hence each of these future annual products has a present value, and the purchase money of the land is simply the sum of their present values of this series of future products forever. Though this series of future products is infinite, a simple algebraical formula shows that it has a finite limit, and that limit depends chiefly upon the current average rate of interest. When the usual rate of interest is 3%, the total property in land is worth about 33 times its annual value. Consequently in such a case one part only of the value of land is corporeal, the remaining 32 parts are incorporeal. If the usual rate of interest were 2%, the land would be worth 50 years' purchase. In the time of Charles II, the usual rate of interest was 10%, and the land was worth only 10 years' purchase. Now when a person has bought an estate in land, it may be said without any very great metaphor that the land owes him a series of annual payments forever, as he only bought this right in the belief that the land would redeem it by installments year by year. Hence the right to receive the future products of the land may be called the credit of the land. It is also to be observed from this example that every sum of money is not only equivalent to the quantity of some actually existing commodity, but also is equal to the sum of an infinite series. This right to receive a series of payments is termed an annuity. Thus every sum of money whatever is equivalent to a perpetual annuity. A merchant in trade exercising a profitable business is an economic quantity in many respects analogous to land. He may have accumulated money, the fruits of his past industry, but besides his accumulated money he possesses his skill, energy, character, his personal capital, his capacity to earn profits in future, as he has already done in the past, exactly as the land has not only produced profits in the past but has also the capacity to produce profits in future. Thus the value of a man is an economic quantity, like the value of land, consists in their property in the realized products of the past, together with the property in the products of his future industry, which of course are inverse or opposite to each other, and, As in the previous case, if we choose to denote the property in the realized profits of the past as positive, the property in the expected profits of the future will be negative. And there are two ways in which a merchant may trade. He may buy goods with money, the fruits of his past industry, or he may buy goods by giving in exchange for them the right to demand money which is to be earned by his future industry. Personal capital, or character, used in this way as purchasing power, is, as we have seen, in popular language termed credit, and as wealth is anything which has purchasing power, it evidently follows that money and credit are equally wealth. But we have already seen that capital is any wealth, or economic quantity, used for the purpose of profit. Hence money and credit may be equally used as capital. If money is positive capital, credit is negative capital. 8. If a merchant buys goods with his money and sells them with a profit, he first replaces the money he expended, and the surplus is his profit. If he buys goods with his credit, and sells them as before with a profit, he first discharges the debt he incurred, and the surplus is his profit. In either case his profit consists in the excess of his property at the end of the operation above v. Hat it was at the beginning. If he trades with money he makes capital of the realized profits of the past. If he trades with credit he makes capital of the expected profits of the future. In each case he makes a profit, hence by the definition both money and credit are capital. But as they are inverse and opposite to each other, if money is positive capital, credit is negative capital. On the three ambiguities in the theory of credit. 9. We must now notice three ambiguities in the theory of credit which have been the cause of much error, and against which it is necessary to warn the student. First ambiguity: a debt is not money owed by the debtor, but the personal duty to pay money. It is very frequently supposed that a debt is money owed by the debtor, or money in the debtor's possession to which the creditor has a claim or right. This, however, is a great error, and has misled many persons. Several eminent mathematicians have fallen into this error, for when they call a debt a negative quantity, they mean that it is money in the debtor's possession, to which the creditor has a right, and therefore to be subtracted from the debtor's property. Thus suppose that a person has a balance of 5 OL at his banker's, but owed 50 litres. They would write it thus: 500 litres, 501, and they would say that his property was 450 litres. It is easy to show that this is an erroneous view. Suppose a person had a balance of 500 litres at his banker's, and had accepted a bill for 50 litres, payable 3 months after date. Then his property would be stated thus: 500 litres minus 50 litres. But no one would say that in this case his balance at his banker's was only 450 litres. Because he is perfectly free to spend the whole of his balance of 500 litres, and all that he is bound to do is to have 50 litres on a certain day to discharge his debt. A debt is never money owed by the debtor, it is the personal duty to pay money. This error is carefully pointed out in Roman law. The essence of an obligation does not consist in this, that it makes any specific goods our property, but that it binds some person to give us something. There is no particular money in the debtor's possession which belongs to the creditor, which he can seize upon. None is pledged to him. It continues the absolute property of the debtor, which he has the legal right to spend or part with until of his own free will he transfers the property in it to the creditor. But the debt, or duty to pay, exists exactly the same, whether the debtor has any money to pay it with or not. All jurists have carefully pointed out that the creditor's right is not a jus in re, or a right to any specific sum, but merely a jus in personam, or a right against the person. Second ambiguity: the word debt means both the creditor's right of action as well as the debtor's duty to pay. The word debt strictly means the debtor's duty to pay, but it has also long been used to mean the creditor's right of action as well. It was already used in this sense in the 12th century. In 1194 Richard I issued a commission for a judicial visitation on financial matters, in which it is said, "Let all the debts, debita, rights of action of the Jews be scheduled, their lands, houses, rents, and possessions. Also let every Jew swear that he will make a true return of all his debts, debita, rights of action, pledges, rents, and all his property and possessions." And this is the meaning which the word debt has long acquired in English law. It means a right of action, a claim, a demand. Thus the Act 46 Geo. 3, c. 125, s. 3, enacts that one debt or demand may be set off against another. Mr. Williams says, within the class of choses in action was comprised a right of growing importance, namely that of suing for money due, which right is all that is called debt. A debt was anciently considered as a mere right to bring an action against the debtor. In any daily paper it may be seen that the executors of deceased persons advertise for any persons who have debts, claims, or demands against the estates of deceased persons to give in a statement of them. An administrator is appointed by the court of the goods, chattels, and credits of the deceased. Thus it is seen that the words credit and debt are used synonymously in law. It is exactly the same in common usage. A person makes his will, bequeathing his debts, that is, his rights of action. Sometimes the word debt is used in both senses in the same Act of Parliament. Thus in the Supreme Court of Judicature Act it is said in Sect. 25, Section 1, whose estate may prove to be insufficient for the payment in full of his debts and liabilities, where the word debt means the debtor's duty to pay. But in Section 6 of the same section it is said, an absolute assignment, of any debt or other legal chose in action to receive or claim such debt or chose in action, where the word debt means the creditor's right to demand. Accordingly in the Digest of the Law of Bills of Exchange, Bank Notes, and c. which we prepared for the Law Digest Commissioners, we began with this definition: credit, or debt, in legal and commercial, and economical, language means a right of action against a person for a sum of money. Hence the student must carefully observe that the word debt is used in English quite indiscriminately to mean both the creditor's right of action and the debtor's duty to pay, and it requires constant vigilance to perceive in which sense it is used. The explanation of this seeming confusion is that the word debitum means that which is due, and if a person has the right to demand a sum of money from another person, it is equally due that the creditor should receive as that the debtor should pay. Hence they are equally debts. In French the creditor's right is called the active debt, and the debtor's duty is called the passive debt. Third ambiguity, double meaning of the words lend and loan, or the distinction between mutuum and comodatum. There is still one more ambiguity to be cleared up which has been the cause of great confusion in the theory of credit in recent times. All the older writers, who were chiefly men having a practical knowledge of business, seeing that credit causes exactly the same circulation of commodities as money, said that credit is capital, without giving any very nice definition either of credit or capital. Since the time of the French economists say, however, this doctrine has been the subject of much ridicule. He says in one passage, which has been repeated by a multitude of writers, that those who say that credit is capital maintain that the same thing can be in two places at once. They conceived that credit is the material thing lent, or the transfer it, and then they ask, how can the same thing be in two places at once, and be used by two persons at the same time? The whole misconception is founded on an ambiguity in the meaning of the words lend and loan, which are used to denote two operations of an essentially distinct nature. There are two distinct kinds of right, the right of possession only and the right of property. And there are two distinct kinds of loan, the one in which the right of possession only for a certain time is given, the other in which the absolute property in the thing lent is transferred to the borrower, and the lender only acquires the right to demand back an equivalent amount to the quantity lent. Sometimes a thing is lent which cannot be used without its destruction or consumption, or its alienation. From the necessity of the case, therefore, the property in it must be transferred to the borrower. Thus if bread, corn, wine, oil, and sea, be borrowed, they cannot be used without their destruction. Money also cannot be used unless the borrower exchanges it away in commerce. Consequently the borrower of money must acquire the absolute property in it. In all cases of loan, therefore, of such things as corn, bread, wine, oil, and sea, and also of money, the borrower acquires the absolute property in them, and an obligation is created between the borrower and the lender by which the lender acquires the right to demand back an equivalent amount of the things lent, but not the identical things lent. A loan of this kind is called in Roman law a mutuum, which word they derived from quod demiotum fit, because from my property it becomes yours. Modern scholars, however, repudiate this etymology, and say that mutuum comes from mutare, to exchange, because in this case there is always an exchange of properties. In these cases the relation of creditor and debtor is created between the parties, and the right which the lender has to demand back an equivalent amount of the thing lent is the credit. The other species of loan is of a totally different kind. A person lends his friend a book or a horse. The friend can enjoy the use of the book or the horse without either destroying them or alienating them. Consequently, in such cases the borrower does not acquire the right of property in them, but only the right of possession for a limited period, and then he must restore the identical book and the identical horse lent. In this case the lender does not cede the property in the thing lent to the borrower, and in Roman law this kind of loan is called a comodatum, and the relation of creditor and debtor is not created between the lender and the borrower. In English law the former kind of loans are said to be returnable in genere, because only similar things are given back. The latter are said to be returnable in specie, because the identical things are given back. Precisely the same relation is created on the sale of goods on credit. The property in the goods is ceded absolutely to the buyer, and what the seller receives in exchange for the goods is the right or property to demand their price in money at a future time, and this right or property is termed credit. Thus the economic quantity called credit or debt is the right which is created on a loan of money, wine, bread, oil, and things of that nature to demand back an equal quantity to the things lent, or the right which is created on a sale of goods on credit to demand their price in money at a future time. This species of loan is in all cases a sale, or an exchange. The confusion has arisen from the English and French languages having but one word in each to denote two operations of an essentially distinct nature. But the distinction is clearly pointed out in Roman law, and the Latin language has a distinct word for each operation. On debts as negative quantities. 10. We have shown that mathematicians call debts negative quantities, but are mistaken in their interpretation of the term negative. After the considerations we have presented, the real meaning of the term is perfectly clear and simple. An obligation consists of two parts: 1. The creditor's right to demand; 2. The debtor's duty to pay. These two quantities are opposite or inverse to each other. The first is active or positive, the second is passive or negative. Hence the creditor's right of action is the positive quantity, and the debtor's duty to pay is the negative quantity. Hence if a person has a balance of 500 litres at his banker's, and is bound to pay 501 at some given time, and therefore his estate may be stated thus: 500 litres. 501, it is not to be read as if he had only 450 litres at his banker's, but it is to be read in this way: he possesses 500 litres, but coupled with the duty to pay 5 all at some given time. Hence an obligation consists of two opposite or inverse quantities: the creditor's right to demand, plus, and their debtor's duty to pay, dash, and may be denoted thus: 1 plus 100 litres, 1 to 1001. In this case the debt means the duty to pay. And as these inverse or opposite quantities are created together, can only exist together, and vanish together, they are analogous to polar forces. On debts as goods and chattels. 11. We have shown that in Roman law all rights, and credit or debts among them, are included under the terms pecunia, res, bona, and merx, and also that in English law all property, except only freehold property, is included under the term goods and chattels. As, however, we shall have to exhibit the mechanism of the great commerce in debts, it will be as well to familiarize the student somewhat more with the idea that debts are goods and chattels. Thus Shepherd says under chattels: all kinds of emblements, sown and growing grass cut, all money, plate, gold, silver, jewels, utensils, household stuff, debts, wood cut, wares in a shop, tools and instruments for work, wares, merchandise, and sea, are to be accounted as chattels. All right of action to any personal action is a chattel. So it was resolved by Popham, Chief Justice of England, and many other justices, that personal actions are as well included within this word goods in an Act of Parliament as goods in possession. So in another case Lord Chancellor Hardwicke said, and debts come within the meaning of the Act, and would pass in a will thereby. Burnet, J., said, a bond debt is certainly a chattel. So Parker, L. C. B. said, but goods and chattels include debts. L. C. J. said, a chosen action, as an obligation, is a chattel. And Lord Hardwicke said, choses in action are properly within the description of goods and chattels. In this case the debt is the creditor's right of action. We have dwelt rather more upon this point than we otherwise should, because this is the chief difficulty which lay students find in the subject. Everyone who has studied the most elementary principles of law knows perfectly well that a right of action or a chose in action is a personal chattel, like any other species of property. But lay readers feel a little difficulty at first to understand how a mere right of action is saleable property, just like so much iron or corn, gold, lead, coal, or anything else. On the transfer of credit or debts. 12. A credit, debt, or right of action being property, may be sold and transferred like any other material chattel. While it exists in the form of an invisible and intangible right, of course it cannot be the subject of manual delivery, but it may be transferred by the consent of the parties. If John owes Richard a debt which Richard wishes to transfer to William with John's consent, the three parties may meet, and then by mutual agreement Richard transfers his right to William, to which John expresses his consent. John is then freed from his debt to Richard, and becomes William's debtor, and Richard is released from his debt to William. And thus the right is transferred from Richard to William as easily and as effectually as if it were a piece of money. But a more convenient way of effecting this result is to write down John's debt upon paper, with his consent that it should be transferred to someone else. This may be done in two forms. Richard may write an order to John to pay him or anyone him direct the sum due, and John may write upon the paper that he agrees to this. In this form the document is called a bill of exchange. It is usually in this form: London, May 4, 1878. 3 months after date, pay to myself or order the sum of £56 for value received. Mr. John Doe, Richard Roe. If John agrees to this he writes his name across the face of the bill, usually with the word accepted, and thus he signifies his agreement to pay anyone Richard may direct. Richard is called the drawer of the bill, and John the drawee, and when he has accepted it, the acceptor. Or it may be a promise by the debtor to pay his creditor or anyone he may name. Such an obligation is called a promissory note, and is usually of this form: London, May 4, 1878. 3 months after date, I promise to pay Richard Roe or order the sum of £45 for value received. John Doe. John is then called the maker of the note, and Richard the payee. When the debt is recorded on paper in these forms it becomes capable of manual delivery, like any material chattel, and whoever becomes the owner of the paper document acquires the right of action. On the extinction of obligations. 13. Obligations are always created with the intention of being extinguished. Credit is always the right to demand something to be paid or done, and if the promise is fulfilled the credit is extinguished. And in that case the promise has value, but if the promise cannot be fulfilled it has lost its value, and is nothing more than a bit of paper. It is by the too extravagant creation of these promises or rights which cannot be paid off, that those terrible calamities called monetary crises are brought about, when those persons who have bought these paper documents find that they cannot get paid. Commercial credit is always a promise to pay money, and it is often supposed that bills of exchange are always paid in money. That, however, is a very great error. There are several other methods of extinguishing credit besides payment in money, and under the modern system very few mercantile bills ever are paid in actual money. There are 4 ways in which obligations can be extinguished: 1. By release, or acceptation. 2. By payment in money. 3. By renewal or transfer, or novation. 4. By set-off, or compensation. On release, or acceptation. 14. Suppose that a person is indebted 1001. and has nothing to pay it with, then his property is minus 100 liters. Suppose that someone gives him he then pays his debt. His property is O, but although he has nothing he is still 100 liters richer than he was before. The same result happens if his creditor releases him from his debt. His property is now O, but he is now 100 liters richer than he was before. This shows that the release of a debt is exactly the same thing as gift of money, a principle of great importance in commerce. All jurists have enforced this principle, thus the digest says, "He who is freed from an obligation has gained." So Pothius says, "A release is a donation." So also Ortolan, "The release from a debt is always classed as a donation in Roman law." So von Savini, "The release of a debt always constitutes a gift equal to the amount of the debt, even though the debtor is insolvent." The release of a debt may be considered to extinguish an obligation in two ways. First method. The creditor may agree to cancel or annihilate his right. As the obligation was created by the consent of the two parties, it may be cancelled or annihilated by the same consent which called it into existence. Now if to create an obligation be denoted by +s plus 100 liters, 100 liters, then to cancel or annihilate an obligation will be denoted by underscore, plus 1001, by 1 to 100 liters, s superscripto. Let us consider the effect of the negative sign on each of the parties to the obligation. The creditor's property is, plus 100%, or minus 100 liters, that is, he has lost 100 liters, the debtor's property is, minus 100 liters. But, 1001, equals plus 100 liters, that is, the debtor has gained 100 liters, exactly as explained above. Second method. The creditor's right of action being a chattel or goods, he may present it as a gift to anyone he pleases, and he may present it to the debtor himself as well as to anyone else. Then the debtor's property will be minus 100 liters, plus 100 liters. These two quantities cancel each other like plus and on the same side of an equation, and they vanish together. The right is not in abeyance, it is absolutely extinguished, and the plus 100 liters ceases to exist as well as the minus 100 liters, or the debt, and thus the obligation is absolutely extinguished. When plus 100 liters cancels minus 100 liters, and when it does not. 15. It must be observed, however, that it is only in the case in which the person has the right to demand from himself, as well as the duty to pay to himself, that the contract is extinguished, because a person's property may be represented by plus 100 liters, minus 100 liters, and therefore for practical purposes equals 0, and yet these two quantities will not extinguish or cancel each other. Suppose that a person has 100 liters in a banker's notes, and at the same time owes someone else 100 liters, then his property is plus 1001 minus 100 liters, and in substance equals 0, but in this case there plus 1001 and the minus 100 liters do not cancel each other, and the plus 100 liters is not extinguished as an economic quantity. Why? For he may pay them away in commerce. Suppose a banker holds 100 liters of another banker B's notes, and B also holds rule of A's notes. Then the property of each banker is plus 100 liters minus 100 liters, but in such a case the plus 100 liters and the minus 100 liters do not cancel each other, and though it may be said that the property of each banker, so far as these notes are concerned, is equals 0, yet there are in existence 2001 of economic quantities. Hence it is only when the right and the duty emanate from the same source, and when they are again revested in the same source from which they emanated, that they are extinguished and cancelled as economic quantities on payment in money. 16. The preceding considerations will explain how a payment in money extinguishes a debt. Suppose that a person possesses rule in money, but owes 50 liters, then his property will be represented by 1 noel, 501. His creditor's right to demand will be represented by plus 501. When the creditor demands payment, an exchange takes place. The debtor gives the creditor 5 ol in money, and the creditor transfers to the debtor his right of action. The debtor's property is then 501. 501 plus 50 liters, or 50 liters in money, together with the right to demand 50 liters from himself and the duty to pay 501 to himself. These two quantities cancel each other as before, and the debtor's property is now 501. The transaction is therefore shown to be a sale or an exchange. Thus the obligation, or contract, was originally created by the loan or sale of the mutuum, and it is annihilated by the sale or exchange called payment. Hence the obligation was created by one exchange and is annihilated by another. On renewal or transfer, or novation. 17. The term novation in Roman law means substituting a new obligation for the former one. But this may take place in two ways. 1. When the debtor himself gives a new obligation, which the creditor accepts in lieu of the old one, which is thereby cancelled. This is called by us renewal. 2. When the debtor transfers to his creditor an obligation, debt, or credit due to him from someone else. If the creditor agrees to receive this, he thereby discharges his own debtor, and agrees to take the debtor's debtor as his new debtor, and then his debtor is discharged, unless he retains his right against him as a surety. An instance of this is where a debtor pays his creditor in a banker's notes. If the creditor agrees to receive them, his debtor is discharged, and the banker is now the debtor to the new creditor. Or suppose that a debtor and his creditor are both customers of the same bank. The debtor gives his creditor a check on his account. The banker transfers the credit from one account to another, and he now becomes debtor to the transferee. Thus the digest says, payment includes not only payment in money, but also the transfer of a credit, on set-off, or compensation. 18. If two persons are mutually indebted, each may claim that the debt he has against the other shall be taken in payment of the debt he has to pay. The debt of each is weighed and set off against the other, and the exchange is called compensation. If one debt is greater than the other, a payment in money of the balance only is necessary. The following are examples of compensation. 1. Suppose two bankers issue notes, and each gets possession of an equal quantity of the other's notes. Then each has a right of action minus 100 liters, say, against the other on his notes, and at the same time the duty to pay minus 100 liters, on his own notes. While the notes of each are in the hands of the other, there are of course 2001 of rights of action, or credit, or debts, or economic quantities, in existence. But when they meet to adjust the payment, each transfers to the other the right of action he has against him, in satisfaction of the debt due from himself. By this exchange each has the right of action against himself and the duty to pay himself. Thus, as we have already seen, both contracts or obligations are extinguished, and the 200 liters cease to exist as economic quantities. 2. Suppose a banker holds a merchant's acceptance for 100 liters, and the merchant holds 100 liters of the banker's notes. When the banker demands payment of the merchant's acceptance, the merchant gives him his own notes, and consequently both obligations are extinguished. 3. Suppose that two merchants issue their acceptances for equal amounts, payable on the same day, and that each merchant holds the acceptance of the other. On the day of payment each tenders to the other his own acceptance in payment of the debt due from himself, and thus both obligations are extinguished. We shall in the next chapter give a very striking instance of this mode of settling mercantile obligations. 2 branches of the system of credit. 19. The system of credit is divided into 2 great branches: commercial credit and banking credit. In the first, merchants buy commodities by means of credit payable at a certain time after date. The second is where bankers buy these commercial debts or credits, by creating credits of their own payable on demand. Banking credit is usually created payable on demand, and must be capable of being paid if demanded. But it is not intended to be extinguished. On the contrary, it is created with the hope and expectation that it will not be extinguished, but that it will continue in existence and do duty as money. There is no necessity that it ever should be extinguished. It may be transferred from one account to another in the same bank, and from one bank to another to the end of time. It is perfectly possible that much of the banking credit which exists at the present day may have been originally created by the very first banks founded in this country, and there is no necessary reason why it should not continue till the end of time. Money is a very expensive machine to purchase and keep up, but banking credits cost nothing to create, and they may endure forever.